Hi, welcome to another episode of How I Raised It, produced by FoundersSuite.com, the show where you get an inside, unfiltered look how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckard, and today's episode is with Jen Zeszut of Goodles, a stealthily healthy pasta maker. Think elevated mac and cheese. In this episode, we talk about why she decided to pursue a very large seed round prior to launching a CPG product, how to pick the best VC partner when you have multiple options, why it's important to always remember VCs are humans too, and much more. If you're tuning into this podcast to learn how to raise capital for your business, be sure to check out FounderSuite.com if you're a startup or FundingStack.com if you are a VC or advisor to get access to an awesome collection of tools for raising capital. It includes a massive investor database, a CRM to manage your raise, a virtual data room to run due diligence, plus pitch deck hosting, investor updates, and much more. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Jen.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by FounderSuite.com. Today I have Jen Zeszut of Goodles coming to us from Santa Cruz. How's your day going?
Amazing. Thank you. So happy to be here.
Great. Happy to have you. So let's just go right to it. What is Goodles?
Goodles. Well, have you ever tasted our mac and cheese yet?
I haven't, and I actually sent it to my wife because we have kids in the target demographic age range, and they love mac and cheese. So no, I haven't yet, but I'm sure I will.
Okay, all right. Well, then listen up, because it's not just for your kids anymore. So Goodles is a mac and cheese, and actually we launched pasta as well. We reimagined. So, I mean, mac and cheese is this beloved comfort food, certainly for kids, as you say. But I'm an adult. I love mac and cheese. And as a matter of fact, most of us who are the part of the founding team, we love mac and cheese. And it's kind of crazy that our big main incumbents who make box mac and cheese have conceived of it as something that's kind of just for kids. And so we looked at this space and we said, I think that we can make this taste even better than the mac and cheese that you remember, because we're actually using clean ingredients and we put actual cheese in our mac and cheese. Amazing. I mean, we're crazy that way. But then we decided to make it stealthily healthy. Mac and cheese is kind of known as empty calories, and it's this guilty pleasure. Wanted to remove the guilt. So it's actually packed with protein, 15 grams of protein in just 1 cup. So if you eat the whole box like me, then you're eating like 37.5 grams of protein, tons of fiber to help you feel full. There's 21 nutrients in it, all from really good, clean plants and veggies. So it's got prebiotic benefits. It's low GI, so it does glycemic index. So it doesn't give you that like airy, kind of sugar high and then the crash afterwards. So it's like good, steady energy. And when the first box mac and cheese ever to be clean label certified and to win the purity award. So it's not a guilty pleasure anymore. And it feels just really good in your body. So what it's done is it's kind of reinvigorated a category that hasn't grown in a really, really long time by bringing people back to Mac. Mac's back, baby.
Mac's back. Yeah. Well, it's interesting. I mean, obviously Kraft has been around, the staple, forever. And then I feel like my kids are, how old are they? 10 and 13. And we've started with Kraft. Then I think we went to Annie's.
Yeah.
We've actually gone back to Kraft.
Interesting. I haven't heard that one in a while. Okay.
But yeah, so hopefully you guys are next. We'll try it out. But so I guess, the big question is like, what's it made of? How do you make it taste good? Because I feel like there's always a trade-off. If you're making things healthy, packing it with fiber and protein, it's gonna.
I know.
Weird.
That's why I prefer for you to taste it first, because if I tell you what's in it, you're gonna be like, I'm not gonna taste that. But we actually have a unicorn on every single box because no one can tell it tastes healthy. And I think that's what the secret of the success is here. So it's got we sneaky nutrition that's snuck in there, and you can't tell. It tastes like the best junk food mac and cheese you can possibly imagine. But then the other kind of big innovation for us was this concept that mac is not just for kids anymore. And so, you know, our two leading competitors, which you've just mentioned both of them, they really conceive of mac as just for kids. So it's, you know, on the back of one of the boxes, like noodle art to do with your 3-year-old, and push the bunny's tail to open the box, and it's all very kiddie. And so, you know, we launched with flavors that are kind of your nostalgic favorites. One is called Cheddar Mac, and one is called Shella Good. So that's kind of like your white cheddar and your regular kind of mild orange cheddar, kind of like your Kraft, kind of like your Annie's. But then we kind of then we said, if it's not just for kids anymore, mac is actually beloved by people of all ages. And we actually did research and found that 85% of young adults age 24 to 36 are actually 85% are eating box mac and feeling awful about it. So we actually launched with all kinds of crazy flavors. We now have, you know, Down the Hatch, which is a jalapeno popper, but with hatch chilies. We've got Here Comes Truffle, which is shaved black truffle in a mac and cheese. We got Hey Hey Elote, which is like Mexican street corn, like all kinds of crazy flavors. And they're all selling really, really, really well. So we've grown the category for the first time in 36 years, and bringing people back to a category who thought, I don't eat mac and cheese anymore. That stuff is nutritionally not anything that I want to feed my kids or that I want to eat. But now they got an alternative, and here we are.
Interesting. Okay. What's the backstory? So where'd you come up with this idea, or what's the genesis of all this?
Yeah. So, I personally, this is I actually was the CEO and founder of 2 software companies first, both for consumer packaged goods. So we built software and sold it to the world's best CPG brands to help them grow faster. So I've kind of always been in the CPG space. But then I did 2 consumer packaged goods companies, one baby food, and then this is my next one. So I know what kind of commitment it is to make a decision to start a company. Like you don't do it on a whim. And actually I told my husband, I swear I'm never going to do it again. And he's like, yeah, right. Yeah. So you go into it and you've got to make sure that every single star is aligned. So in order to hit it really big and have a really big success, I think you kind of have to have, like, everything has to be there. I think my co-founder, Paul Earl, and I talk about it kind of like going to Vegas and you're playing the slot machine. Like if you're playing the slots, it's got to be cherry. And if you have one banana or there's one lemon, you're getting nothing. So, this is one where you kind of have to make sure that the stars are aligned, and it just felt good on every angle. So it was actually Paul Earl and my other founding team member, Molly Mache, who's the magical one who cooks this all up. She's our head of R&D and our head of product. They're like, Jen, what do you think about mac and cheese? And like looking at the category, knowing that there hasn't been product innovation, nutritional information. The other thing you can't see through a podcast is our packaging and our branding. But it's asleep at the wheel kind of category. Even Annie's, which you think is like the new hot newcomer, that was 36 years ago that Annie's launched, and nutritionally hasn't really evolved nutritionally much at all. So it's just a category that is totally ripe with innovation. And I just knew that this team could nail it on product. I knew that the brand could stand out and just do something wow and weird and crazy. Since you can't see our packaging through the podcast, we are bright, bubblicious colors. It looks like a disco party in the aisle. And these were all things that when we went fundraising, we heard a whole lot of no's across the board. But I just felt it. We just felt it in our bones that the category, the product, the nutrition, the team, the branding opportunity, like all the stars were aligned. Like this was ripe for cherry. Now, getting VCs to understand that and believe that was not easy, and we'll talk about that later. But it was kind of a lightning bolt moment as I thought through it, and I walked into the kitchen after having this phone call with Paul and Molly, and my husband looked at me and he goes, "God, you're doing it again, aren't you?" I didn't even say a word. I was like, "Yes, I got it." So amazing. And here we are 2 years later. We launched 2 years ago. We just turned 2.
Wow.
So we're terrible 2s now.
Great. Well, congrats on getting off the ground, which is, harder than it looks, especially I would imagine for CPG stuff like physical products, right? I mean, that's hard.
So hard and takes a lot of money.
Is it made in Santa Cruz or do you guys make it somewhere else?
No, I'm happy to report we are at insanely massive scale at this point. We recently crossed a crazy milestone as we're selling 1 box every 2 seconds. We are national. We're all over the country. So we're producing all in the US, but at multiple locations and multiple co-mans all over the US now. So
yeah, interesting. All right. Well, let's talk about fundraising. So how much have you guys raised and over how many rounds?
Yeah, so we've raised a little over 27 million over a seed round, which was all kind of pre-revenue. And then most recently we did our Series A, and that ended up being led by L Catterton. And that was just in May this past year. So six months ago or so. And it really is a tale of 2 fundraises because pre-revenue, and that was the scrapping and the scraping and the 100 no's, and we heard everything. We heard this packaging doesn't even look healthy. Like, if it is healthy and if it's natural, like, why aren't there a bunch of broccolis on the box, like doing push-ups? Couldn't you like put some barbells and some broccoli with barbells on there? And they didn't like the packaging. They didn't think that there was a market for anything other than kids. You got kids are the only ones who eat mac and cheese. You can't go after a young, hip, demographic who doesn't have kids. We just heard no on every possible front. So that one was, that one was tough.
Let's start with how you approached it. So you guys were pre-revenue. I assume you had the product already, or at least some flavors already made. Were you in distribution at all yet? Or, maybe
no, not at all. So Series Seed was, one thing that we did do is that we really wanted to, in order to de-risk it for everyone, we actually kind of co-created the product with thousands of consumers all across the country. So we had our community of do-gooders, and we had been shipping this is all in 2020. So this is little tiny baggies being sent all over the country. We had 3,000 do-gooders who helped to taste test the product and taste versions of noodles. And there were some really awful versions of our noodles and things like that in the early days. But that de-risked it a little bit because we had, once we got to a point where there were 3,000 taste testers in every market around the country saying, we had a 92% switch rate. So 92% of those said, I'm dropping everything that I'm doing. I'm going to eat this mac and cheese forevermore. That kind of helped to de-risk it a little bit with our VCs. But it was tough, all self-funded. We had to do R&D, and R&D is expensive. This isn't, it's not baby food where you just kind of smash up some stuff and put it on your stove. Like, you're running 100 pounds, and then you're running 1,000-pound test runs of pasta, and then you're doing 10,000-pound, even just test runs. And it usually doesn't work. So you're throwing that away and you're doing it again. I mean, these are like big dollars. And, personally, cashed in my 401k and borrowed from it. And those are the early stressful days for sure. And we wanted that funding so badly, but I will say, the kind of dramatic story that I think is the best one to tell my main point here is that, fundraising, ultimately, you think that it's about securing funds. You think it's about securing money. That's not what it's about. The money is one of the many ways that that one thing you're going to need to help you be successful, but it is not everything. You are looking for a partner. You're looking for a partner who's going to give you the best odds of success at exit. And that could be through lots of things. And usually the money is the easiest thing to come by. You're looking for a partner. So in those early days, we wanted to close so badly, and we had a lead for
Wait.
after hearing
Let me
now
pause
100
you. Let me pause you
times.
really quick.
Yeah.
How did you, before we get into that, because I definitely want you to talk about that, but how did you approach, like, if you sat down, like, we want to go find people that will invest in a mac and cheese company, how do you even like identify relevant investors? Start from almost like the source of the investors.
Yeah, I mean, I had been in the CPG and the food space, so like there's a small orbit of people that I already knew, but usually it's just who do you know, who knows somebody else, and you're just asking around for introductions. You're just like, hey, do you know anybody? A lot of my background was on the software side, so there's nothing about can't call up my my friends at all of my software companies. Hey, you guys want to invest in mac and cheese? The answer is like no, but go have fun with that. It's tougher. It's tougher to pull those names together, and it's really tough on the consumer side to do it pre-revenue. So once you have traction, once you're in market, once you're all of those things, we wanted to raise beforehand because we wanted to launch with a bang. We wanted to go national out of the gate, national at Target or a major retailer, but we didn't have any major retailer committing to us. Even in 2020, it was hard to even find line time. So, the big question was like, where are you going to produce this? And we were like, we're going to find something, I'm sure. I'm sure. So it was a lot. There was definitely risk at the beginning. So when we did finally find a lead for our Series C, it was like, oh my goodness, thank goodness, we finally are going to close this round, and we're finally going to pay back my 401k, and oh my gosh, and take a salary, and a minor salary, but at least we'll finally be able to do that. And no names, don't ask me for names, I'm not giving them to you, but it was literally wire day. And it was like, hey guys, what time are we wiring? And I sent actually in an email to the lead. And the email was returned that the address is no longer like a valid address. This is like the work address. I was like, oh, must have had a typo, no big deal. Call, go straight into voicemail. I start calling other people, and all of the emails for the entire domain are being kicked out or being rejected and saying they won't go through. I finally get someone, and needless to say, I don't exactly even know what the story is. It involved something with a gun and something with police and something with I didn't do it, and then there was a stalker, and then there was I don't even know or understand the story. But then it was like, but we're fine, we're ready to wire, let's go, we're totally ready to wire. And it was like, thank you so much for all that, hold tight, I think we're not going to wire, major timeout. And my co-founder and I were like, we can't take this money. Like, I don't even understand what's happening, but we can't take this money, because getting stuck with a bad investor, like, you can change almost every decision in a company except for your investor. Like, you can even get rid of a co-founder more easily than you can get rid of an investor. And we just had to make that call. We're like, don't you wire one thing, we're not accepting the wire, and we're going to figure it out. And and thank God we did, and the rest of this history and all of that kind of fun stuff. But it's just a really good reminder that you're not trying to get money. You're trying to pick a partner that is going to be there for you through thick and thin. And if there is anything weird, you run the other way. Just run the other way. So yeah, we did. But it's fun because it's a tale of two stories, because we're going to get to the other part. But my Series A, which we just closed in May, 32 funds vying and fighting over who can lead our Series A. So it's and that was just 2 years later.
Just let's stick with the seed round just for another 30 seconds or so.
Yeah.
So you were just looking at venture funds or angels? Were you looking up for executives from CPG companies that maybe made a bunch of money on an exit, or what were you?
Yeah, we definitely had both of those. Like, we knew we needed scale. Like, you can only get so far with $10,000 checks or $20,000 checks. We needed 10 million really to get off the ground. So it just takes a really long time to do that through just friends and family. So we did a little bit of friends and family, but we knew we had to have an institutional investor with deep pockets, and who had a significant enough ownership percentage that they'd be with us through thick and thin, because there's always thin. So we definitely had our share of those, but in the beginning, we probably, maybe had like a dozen kind of friends and family or others from the CPG space or things like that. It really wasn't until later when the demand was so crazy. We now have probably more than 100 A-list celebs, Hollywood athletes, music stars, all these kinds of people also on the cap table now, along with my venture investors. So that is definitely a difference between my software days and these consumer brand days. The demand is really, really high across the board, and it's so weird to have these famous A-list celebrities texting you saying, I got your number through somebody, I need in. And you're like, I don't know, hi, nice to meet you. Sorry, there's no room. It's very weird. It's very weird. But
okay. Interesting. Well, let's talk about this. So, all right, let's go to the Series A. Actually, one last question before we do that. You said like $10 million. Does it cost like $10 million to get a consumer packaged good company off the ground with a decent?
It totally depends what you want to do. There's many different ways to do it. If you're doing there, we could have done a small little mac and cheese where you run really small batches, you run a little something, you put it in a regional test market, let's call it a natural channel. You do Sprouts, Northern California, you test it to see whether it's kind of working, and then you slowly start to roll out. There's many different ways to do it. We just knew we had our eyes, we want and our sights to be right in there with the Kraft and Andes of the world, and we were going to make this no longer a duopoly, and we were going big, and we were going national, and we we're going to go hard, and we were going to go day one. So we kind of hit the scene like a supernova, and haven't looked back since. So there's many different ways to do it. You don't need that. But that is what we needed to get significant scale, and that's where we are. So
yeah, interesting. Okay, let's go to Series A then, and the much easier Series A. What was this sort of situation at that time? Were you in X number of stores, and talk about tell the story.
Yeah. So, when we launched, we had no national retail distribution. So 2 years ago, we just launched D2C because that's the only thing that we can control because nobody else said yes to us. But we actually secured national distribution from a Target and from Whole Foods in every single store across the country really early. So we knew we'd be going in really big and really hard and really fast. But that still was the second half of our first year. For our Series A, which was just this year, 6 months ago in May of 2023, we were in a very different position. I think maybe 35,000 points of distribution, which is number of SKUs in doors around the country, and just scaling super, super fast, thousands % growth rates and things like that. So it's just there's just so much more data now, and also data from the retailers themselves about category growth. We know that we are actually incremental to the category. We're not just stealing share. We're actually growing the category in a giant way. Just so we've got like really solid retail metrics. We also have the D2C metrics. We're fully omni-channel at this point. So I think pretty much if there's any risk to things, operations can clearly scale. We've got redundant operations everywhere in the country. So most of the risk was out, even though it was only about 18 months after launch when we did our Series A. It just all went so fast that normally that's like a 5-year horizon for most companies, and we did it in 18 months. But that's, I think, the reason why, we had 32 institutional investors vying to lead our Series A in May, which think back to when May was. I remember it well because Silicon Valley Bank went under.
Oh, yeah, right. Yeah, exactly.
We lost $2 million $3 million that day. And I was on roller skates at Expo West. I'll never forget that moment. We eventually got the money back and all that kind of stuff. But that was tough times. Those were rocky times. There were lots of term sheets that were just kind of not coming through. And there were a lot of consumer brands who were freaking out at that point. Well, actually tech companies too. Everybody was freaking out at that point about the rocky market. So the fact that we had 32 institutional investors vying to lead our A was pretty flattering.
So how did you identify 32? Did they come to you because they saw your growth? Did you say, here's our dream list of CPG and VCs? How'd you put together that list?
Yeah, I mean, VCs have been reaching out since almost the beginning, like as soon as we hit. So lots of relationship building has been happening for years before that moment. Many of them, and honestly, if you're just meeting them at the last minute, or that you're just popping up on their radar at the last minute, or hearing there's a deal coming and someone jumps to the bandwagon, like you didn't have the same vision as the others did anyway. So I don't even know if I want to invite you to the dance. So most of them were relationships which predated the Series A. They had been reaching out and it was like, not yet. Okay, it's time. We're ready to talk. So there were definitely a couple maybe that we wanted to reach out and make sure that we had, but most of it was inbound. So yeah, but we had to run a really tight process because we didn't use a banker, and that's a lot of work to get through, diligence. And when I say diligence, I mean running diligence on picking the world's best partner, like our diligence and choosing someone. So
talk about that. If you have a startup that has the luxury of, choosing from 32 investors, how do you pick the best one? What do you do?
We always invite them to our headquarters here in Santa Cruz, California. It's like Willy Wonka's chocolate factory. We have disco balls and a dune buggy in the middle of our office, and we have cheese waterfalls, and it's just joy. And we're cooking mac at the bar and those sorts of things. So we're like, hey, if you're interested, come to Santa Cruz. Some get on planes and fly out or drive down or whatever. Some fly out 2 and 3 times over the course of 18 months as we're leading up to the Series A. That's commitment. So we're getting to know them, all throughout the whole entire time. We're also running a process. The way that I do it is I say, well, I'm the least interesting person of all, so you need to meet my team. So my proposal is that you do an hour one-on-one with my sales team, my ops team, my finance team, and my innovation and R&D team. They'll walk you through kind of what they've got going on. You ask questions, like get to know them, because they're the magic. And what I actually do at the end of those is that our team puts everything into one big spreadsheet. I've got kind of key questions. I'll ask, did they ask you really sophisticated questions? Sometimes it's like 101 and you're like, really? You're asking me this question? How do you, I don't know, stamp it with Best Buy dates? And you're like, what? But sometimes they're asking really sophisticated questions and you're like, yes, those are the right questions to be asking. Yes. So we're scoring them for that. We have one of the questions is like, do you get the sense that they really know our business and could add value? And then I ask what areas do you think they add the most value? Because, they might be really good, strong on branding, or they're not strong on branding at all, but they're really great on operations. That's great. As long as my board has deep expertise and strength in kind of all the areas. It doesn't all have to be in one area. So like, where are they going to add the most value? I asked, did they offer up like an idea or say something that made you go, that is a good idea. I should look that up. Like some kind of suggestion that's like net new to our thinking, because we're looking for that all the time. And then the last one is like, if the shit hits the fan, hopefully I'm the first person you're calling when that happens, but would they be the second or the third person that you're like, I really should get them on the phone because they're going to have perspective on this. I just know it. So those are some of the things. And my team fills out this giant grid after every single meeting, and we're scoring, and we're really looking for the people that has, who took the time to do it, who flew out, who spent time with our teams, all that kind of stuff. And so we do. And then of course, reference checking on CEOs and their portfolios. So that's pretty thorough.
Yeah, that's cool. That's interesting. Did it actually end up with a quantitative score, like the ones that you ultimately went with? Did they have the highest score? Was it very mathematical, or was it also kind of a gut feel?
It's always both. There's,
Yeah.
it'll be like 6 of them are in like the top tier of the 32, but then there's a gut feel that just, it's everything. It's what you talked about when we were driving around Santa Cruz on West Cliff Drive, driving the dune buggy. Like, do I feel like I know their kids? Do I really feel a connection? Because I mean, these are partners. These are partners for the long haul. So all of those intangibles for sure come into play. Yeah, no doubt.
You mentioned 100 A-list celebrities on the cap table. So
Right.
let's get into that a bit. What what does that mean? How did you pull that together? If you can name drop, that's always fun. I saw Gal Gadot, am I saying her name, on the website, but yeah, talk about that.
Yeah, I mean, how does it happen? I don't really know any of these people. So it's someone who is so proud and it might be a VC who's so proud and excited that they wrote a check, that they tell someone and they're like, hey, would you mind? Can I just connect you with, Klay Thompson? And you're like, sure, I'm happy. Like, my God, yes, I'm happy to, or whatever it is. So yeah. And then word gets out and then that person tells another person, that person tells another person. And then pretty soon you just got all these people like asking if they can be a part of it. So we got tennis stars, we got NFL stars, we've got golfers, we've got amazing World Cup soccer players, we've got so tons of athletes, which I think also surprised me because it's really the nutrition benefits and the protein, like even like the 49ers, their family office invested so that like they can get it to their athletes and things like that. I was like, wow, that's cool. So yeah, there's that big contingency. There's another big contingency on the kind of Hollywood side. And then we also have, a bunch of influencers that, there's all kinds of stars. So it's really just been amazing. But it's a win-win because I'm not paying them anything. I'm just saying, okay, you can give me $10,000 or $20,000. And they have a chance to actually move the needle on my business. They've got 6 million followers or whatever it is. So if they talk about Goodles or share with their friends and other rappers or other people or whatever it is, I mean, like, why not? Like, if Machine Gun Kelly wants to tell people about, like, okay, how about it? Let's do it. Or Post Malone or whatever it is. Like, okay, awesome, let's do it. So it really is I don't know, it's kind of a win-win. I'm a huge fan of it, for sure.
Do you just sort of let it organically happen, or do you say, hey, celebrity A-list team, can you post this? Or, do you sort of tap them, or you just sort of let them do what they, I mean, I can imagine it'd be tricky to ask some of these guys and gals to do too much.
Yeah, I think it's more organic. Like usually they come to us because they're already gaga over Goodles. And there's a lot of gaga over Goodles right now. That's been the shocking thing is that we've got people tattooing our branding on their bodies. We've got people filming commercials for us, random people that we don't even know. We are invited to weddings, like not me, but like the noodles are invited. The mac and cheese is invited to celebrity baby showers. It's kind of been crazy. So they have all come to us. And I think if they come to us totally passionate, like, oh my gosh, how can I be a part of it? Then you're like, all right, they're going to probably do something. Whereas if we go chase them or we beg them or any of that kind of stuff, it just doesn't work the same way. They've got a million things going on. But, Kim Kardashian and Khloe Kardashian, they are huge fans of the brand. Like they take pictures of their pantry. We're always in there, which is so sweet. They're not investors. They just love us. And they showed up at we did a mac and cheese brunch at Art Basel, and they showed up at our event to hang out with our team and our friend and David Grutman, who is an investor. But so we just have a lot of friends in high places. But it's we don't have any expectations. There's nothing written into the contract that they have to. It just makes good business sense for them. If you can move the needle on one of your investments, why not? And they do. So
that's cool. It's amazing. I've watched this category of the celebrity, musician, athlete, investor emerge over the past 10 years, really even 5 years. And we're, shameless plug, we're actually almost done building a list of I think we have like 330 musician, actor, celebrity athletes that we're loading into Founder Suite's database. So it's kind of we're trying to tap on this, right? Like, how do you,
Totally.
it's great. It's amazing to see it
And
happen.
it's great for them too. I mean, I'm very close now with the talent world and the agents and all of that kind of stuff. Confidentially, I won't say names, but a lot of them will tell you that they are set to make more money off of their investments in companies than they will off of their Hollywood deals or things like that. And in which case, like they do movies in order to stay relevant so that they can sell their products. So, like it really is truly a win-win. It's fun, but it's a huge revenue stream for them potentially as well. So if we hit it big, if you have cherry, then you hit it big.
I remember when Ashton Kutcher started investing in startups, and he would like show up at TechCrunch, Disrupt. Like, what is he doing here? But he killed it. He crushed it. And I think he and several others paved the way for, the celebrity investor archetype, I guess you could say. So
yeah, exactly.
Any other general advice for founders, maybe CPG founders, that we haven't covered? Or if you were, doing this all over again, what advice would you give your younger self?
So I want to take each one of those. So sure. One which is contrarian or kind of like different perspectives that I might have. Obviously I'm a consumer brand now, but I maintain that VCs and investors are humans, even the ones who are software investors. They're human, actually. And yes, of course they have to have the data. Of course they have to have the analytics. Of course they have to have, metrics that prove that you are a well-known run business, great unit economics, you can scale, all of that kind of stuff. I'm not saying that goes away, but there is a thing like it's important to market to them and to get them passionately excited about the brand. They have FOMO too. Like they get caught up. So, it might be one of the tattoos comes in, or a celebrity, at 3 a.m, a New York Yankee texts us a picture of his empty bowl of down the hatch, and it says, "This shit hits." Like I text that to every prospective VC, just like, what is going on? What's going on? And they are getting so excited. Like they are getting so excited and worked up, whether it be like, I can't believe this, but check out this commercial that just came through. Or it could be one of the very true things. It could be a note from a parent of a pediatric cancer patient who has a little girl going through chemo, which we have dozens and dozens of these letters that come in that just say, I need my little girl to have good nutrition, but the chemo makes her so sick. She all she wants to eat is mac and cheese. And now I get both. Like, it's just, you've changed our lives. Thank you so much. It's everything. It's not just that, it's all of those things. I am texting my prospective VCs all the time. And if they aren't in a kind of fevered frenzy over getting into this deal and wanting to do the deal, you got to have them loving your brand. You got to have them just like gaga crazy for the brand. And if they're not moved by it, then I don't know if you need them. So anyway, I do think about VCs as humans that can get it really excited about things. So I market to my prospective VCs for sure. I don't just do the generic little notes. Like I'm texting, I'm sharing, and they're usually sharing back with me too. Like, look at us, we just ate 7 boxes tonight. We crushed it. Whatever it is. Like engage them like as humans and as people. I don't know, that's how I do it. As far as advice to myself, my younger self, I know exactly what the answer is. Like I've done this, now 4 times, and my perspective is so much different than it was before. Forget valuation. It's such a red herring. It doesn't matter. We talked about the picking of a great partner, someone that you want to call through thick and thin, and making sure that they have enough ownership to really care. It's not a battle to try to get them to have as little as possible. You want them to have enough that they do care and that they're by your side for the long term. But the other thing that I would say is that take care of your team and pick a term sheet and pick terms, not only where you maintain control and you get to make decisions because you're closest to this business. As a founder, you're closest to this business. And if someone wants terms that say that they can decide whether you can sell or when you can sell or any of that kind of stuff, like run away. You need to run your company. So controls become really, really important. And then the other one is, like it's not even preference. It's not like 2x is worse than 1x liquidation preference or whatever it is. It's not even that. Even that is simplistic because someone can give you a really bad deal with tons of controls and a low liquidation preference. So I don't even think about that. Like that's actually a red herring as well. In my mind, I want to take care of my team. There's a right way to win, and I want to make sure that I don't gamble on the backs of the common shareholder. So when I think about that kind of break even / conversion point where preferred flips to common, and make sure that is a number, like, you can clear that. That your VC and your ops person are in the exact same boat when we go to exit. Like, I feel good about that. I feel good about that deal because it's so easy to get caught up in all that kind of stuff and be like, well, I'm taken care of and the VC is taken care of. And oh, darn, the common shareholder got screwed. Your team is everything. My team is everything. None of this happens without my team. So I think there is when you win, you will know that you won the right way. So for me personally, that's my mantra. And I know that it's unconventional. I've heard it when many people tell me that that's unconventional, but life's too short. You got to do this with your team in mind. And I do. So
yeah. Wonderful. This has been fun. If people want to learn more, Goodles.com, but also they can find it in Whole Foods, Target. What else? What else do you want to?
Safeways, Albertsons, Publix, like lots and lots of places around the country for sure. So yeah, and you can follow us at all Goodles. I'm happy to even share. I've got my top secret Goodle, my CEO code. If you want to try 25% off of all of our Mac, you can use code MACISBACK. MACISBACK at Goodles.com. You get 25% off all of our mac and cheese and pasta.
Well, this is fun. I'm sure we'll catch you again after the next round. Or, I mean, it's hard to imagine that you guys won't get acquired if you're, let's touch on this 1 second.
Okay.
Because that's got to be, there's only 2 big players in this space. So as you're getting this traction, does this even enter your mind yet about, getting snapped up? Or are you just focused on, running a good business?
We're focused on scaling for sure. That's just that you got to build a great company, and for us that means legendary business results. Our mantra is that we're an elite team with arms locked, having fun and doing the best work of our lives to create a legendary product and a legendary brand in order to create legendary impact and legendary business results. And I think that if you focus on creating legendary business results, the rest takes care of itself. But yeah, there's been inbound pings from day one. I think it was 4 weeks after launch, and we started getting our first ping. So I think that we're onto something, and we're just happy that it's bringing so many people so much joy. Because my goodness, the world could use a little weird, a little joy, and some little feel good food. So we're happy to be part of it.
I can't wait to try it. I'm sure my kids will love it. So
thanks, Nathan.
And I'll love it. Awesome. All right, Jen, thanks so much. Well, appreciate this. This is a lot of fun stuff, and can't wait to check out the product and catch you on after your next round, whatever that might be.
Thank you so much for having me. Appreciate it.
Over now. Thank you.
Okay. Bye.